not one of them. Cause we are not the same. No, I'm not one of them. I just stay my lane. No, I'm not one of them. Cause we are not the same. No, I'm not one of them. I still my energy. I'm an energy man. I'm in a melody man. Hey, come on, come on, come on, come on. Off for there. Come on. Like a keeper, I stay my post. When I come out,
Can you all feel the energy?
Cause I pull up inside
If you
the
can
ghost.
feel the energy, type energy in the chat box and let me know you are there.
Today,
you know I can't see you, so I need your encouragement.
And I feel like today. That's my daddy, Baba look baby. Cause you are not the same.
All right, people. Good morning, good afternoon. I'm sure it's probably afternoon and evening for everyone out there now. It's still morning for me, actually. So it's still good morning on my side. Good afternoon for you guys, and good evening for you wherever you're joining us. I'm just so excited again. That's why I'm playing that song, Energy, Energy, because I think we should just theme this um, annual conference energy, because that's what all of you bring to this conference. You've brought so much energy to this conference. It doesn't feel like we should stop, day three of conference, you probably feel that, oh, people will be tired now. People will have just few people are coming in and here. But man, today is just full of energy in all the session. Thank you so much. And you guys just make it that. This is what make our conference the best conference on the surface of the earth. Thank you so much, Hall. We're going to move to the showcase now. Just like we had yesterday, our members doing amazing work. We try to showcase their work and then get you inspired, and you can go into the different booths where they are and have conversation with them. So we're going to be having that now. We have 4 line sessions lined up, and if you can have the presentation up now, that would be great, so that I can share with our amazing audience the showcase we are going to be having. Trust me, it's like I said yesterday, it's going to be another inspiring session for all of you, because we are going to be showcasing some very, very powerful work that our members are doing all around the world. And so please get set. And then we're going to be having showcase from Palladium. How have we sparked a sustainable venture capital ecosystem in Ecuador? This is really going to be interesting. Please make sure you listen very carefully. And another one for ADA. How have we financed young entrepreneurs with revenue-based loans? That's going to be a fantastic one also. And then we're going to have one from African Management Institute. How have we prepared SGBs for future crisis? This is really good. And then Village Capital, how have we supported the development of financial health in Latin America? Another wonderful one. And then we're going to be having another one for Habitat for Humanity. How have we fostered sustainable low-income housing in housing innovation? Thank you so much to all our members that presented, that giving us these videos to inspire others. We are really, really grateful. And we are going to go into the video now, and then I will see you at the end of the video. Thank you so much. All right, still trying to make sure that we have a perfect audio. But please just stay tuned. It's going to be another great time. That's something that comes with virtual conference. Technologies always don't cooperate with you, but it's going to be another awesome time. All right, let me know if you have the audio now. Yes, all right, see you.
Of our work, we implement international development programs funded by international donors like USAID, FCDO, and DFAT. And in 2013, we implemented the USAID Ecuador Productive Network Project. We began the project, as Palladium always does, with a demand analysis of actors that finance the venture capital ecosystem in Ecuador. We identified that the greatest gap in the ecosystem was for risk capital between seed capital and credit. Through the Productive Network Project, Palladium strengthened institutional frameworks and national efforts to promote investment and economic growth. And as part of that work, we supported the establishment of the Alliance for Entrepreneurship and Innovation. After the Productive Network Project ended, the Alliance was established as an independent and financially sustainable organization with an elected board of business leaders and a strong network of partners. The Alliance is a network of 143 public, private, and academic members and helps meet the key needs of entrepreneurs, including access to markets, financing, tailored mentors, peer learning, and serving as a conduit to enhance the policy environment. To fill the gap in risk capital that we identified during the demand assessment, AEI uses a trust financing model to invest in entrepreneurs. The board and investors provide investment capital, the trust manages resources, contracts operators, invests, receives dividends, and divests, returning benefits to investors. But it's not only the trust financing model that makes the Alliance successful. It is strong linkages to the market system. Partners open doors, facilitating market linkages such as getting products on retail shelves. Peer learning is also critical. Entrepreneurs learn from one another. The ecosystem approach meets needs from problem solving to relationship building to the policy environment. But the greatest value comes from the business leaders' commitment and time to generate the next generation of business leaders. The impacts of the Alliance are clear. In 2020, with $42 million in committed capital, the Alliance invested $8 million in 164 entrepreneurs. The majority were youth under the age of 40 and 50% were women. 54 CEOs were engaged in 170 hours of mentoring, and entrepreneur sales went up by $10 million and 342 new jobs were created. The Alliance model has already been replicated in Panama with the establishment of the Alliance for Entrepreneurship and Innovation Panama, initiated in 2019. Additionally, business leaders from Costa Rica, El Salvador, and Peru have reached out to the Alliance in Ecuador to learn how to set up the AEI model in their own countries. Come chat with me during the expo to learn more about our work in Central and South America and how this model could be expanded globally.
BTS professionals are familiar with the tension between impact and reach. For a given budget, should we spend more time and resources reaching fewer businesses but creating deeper impact, or run light touch interventions that reach many more businesses? No doubt we each have our personal preferences and positions on this, or have selected a route within our own organizations and particular programs. At AMI, we've always believed that blended or tech plus touch helps to address this tension and is a powerful way to design growth programs that embody the best of global resources for SME growth. COVID, of course, threw the touch part of the tech plus touch out the window. And as an organization, we switched rapidly to digital to meet the needs of entrepreneurs. And doing so, we're able to reach so many more entrepreneurs, reaching 4,000 entrepreneurs last year compared to just over 1,000 in the previous year. So in this context, did we see a dip in impact as we focused on reach? Excitingly, we found that the trade-off wasn't a given at all. So how did we do this? Well, before we get into that, let's hear from an entrepreneur who took one of AMI's digital business growth programs designed for the COVID context.
Being part of AMI Survive to Thrive program, there's one thing that stands out for me in my business that I can't fail to mention, is being able to communicate what is the vision of this company and where we're headed. And this has been able to make communication very easy within and without the company. And that's one thing I'm really proud of. And then again, it's gained my confidence. I didn't know I would really talk to a large group of people, be it either online or outside. During the COVID period, of course, there was challenges. Every business were facing different challenges. But of course, through this program, AMI Survive to Thrive, if you consider yourself a thriver, we'll come up with ways to thrive. One of them is having flexible working time for my staff. So I thought out of the box and came up with different products and also diversify. But again, you cannot survive and thrive if you do not have people guiding you. So some of the activities that I adapted, and some of the models that I adapted to survive so that I can thrive, I definitely took them from AMI. And every single thing I picked and noted down was definitely to make the organization better.
So in summary, our learning team focused not on trying to transition blended or face-to-face programs online, but on designing from the ground up a virtual first suite of new offerings. These included practical face-to-face virtual workshops, tools and templates that participants could take away and apply in their business with the support of the AMI online platform, peer networking, and this was a real area of focus for us, and program manager support. So our program managers would be contacting participants to encourage them to apply tools and to nudge them to put in place new practices in their business. So what was the result? We found that we had the opportunity to reach large numbers of SGBs across a suite of programs, which included light touch networking events, 2-week virtual boot camps, and 6-month intensives, all in all reaching tens of thousands of SMEs in over 30 African countries. Our design team learned to respond even more rapidly to the evolving needs of SGBs as the pandemic progressed. They employed an iterative design process which used rapid feedback loops that are enabled by digital to drastically reduce our program design time. The impact's been exciting. 100% of the SGBs that we've worked with reported that they survived the pandemic to date. That's on an 87% response rate. And we saw an average job creation of 1.6 jobs per business, not at a pre-COVID level for AMI programs, but encouraging in the circumstances. We found that the shift to digital had no negative impact on program engagement and completion, and we were able to achieve far higher geographic diversity, reaching SGBs in over 30 countries instead of just our initial plan, which was a Kenya and South Africa focused year of programming. Check out this short video clip to learn more about the impact of our flagship SME growth program, the 6-month fully virtual Survive to Thrive initiative.
So what did we learn from this experience? Firstly, we found that taking a half-day online workshop doesn't work. So we reduced engagement times, but increased engagement frequency. Secondly, to drive self-paced online engagement, you need an integrated and structured experience, closely tying in what happens in live sessions to online tools. And finally, networking. Entrepreneurs consistently tell us they want more of this. And so we've carved out more space to facilitate this, especially now that coffee breaks and workshops are gone. But there's still stuff we're trying to figure out. How does this work for women entrepreneurs? Digital does give us the opportunity to better understand women's experience with BDS through data analysis. We're digging into trends and patterns about women's online learning behavior to ensure that we design for their needs. Then we're also trying to understand how we support less tech-savvy audiences, keeping in mind that tech and touch is key. So for example, we ran Zoom sensitization sessions with a partner on the ground for our refugee entrepreneur program in Uganda.
So what's next? Firstly, we want to make sure that our new approach really works for women and for the most marginalized. Secondly, we're looking at chopping up existing learning programs and modules into even more bite-sized content based on what we're learning about how SGBs' attitudes are changing to the way they like to access their learnings. Thirdly, we've always had an assumption that managed programs are what work better based on what we've experienced in the past and data we've collected. And by this, I mean structured programs with program manager support. But we're finding that the way that SGBs learn is changing and are experimenting with asynchronous tech learning. So by this, I mean SGBs accessing learning in their own time and at their own pace and at the volume they prefer. That might be through our app or online platform. And then giving them the option to opt in to higher touch, even one-on-one support, for example, from a local BDS provider. We're excited to see what 2022 holds, and we're committed to keeping on challenging our assumptions and hypotheses about what works in SGB BDS in Africa.
Throughout history, pandemics have led to major innovations in housing. Cholera drove the creation of indoor plumbing. Tuberculosis reshaped design for multifamily housing. So what new ideas are going to grow out of the COVID-19 pandemic? Well, globally, 1.6 billion people live in inadequate shelter, a number that's going to increase to 3 billion by 2050 if no action is taken. Habitat for Humanity International is a leading global organization operating in 70 contexts around the world. The Terwilliger Center is focused on making housing accessible for low-income owners. Habitat launched ShelterTech, the world's leading platform for affordable housing innovation, to bring together entrepreneurs, corporations, investors, development partners in mapping out and supporting innovation with the potential to disrupt the affordable housing sector. To date, ShelterTech has supported over 60 innovators enter the market or scale their solutions in 15 countries. Support under ShelterTech is more than traditional acceleration support. With ShelterTech, we aim to help startups move down market to address the affordable segment. Habitat's Shelter Venture Fund has placed $2.6 million in investment to shelter entrepreneurs. Around the world right now, homes have become even more central to our lives and livelihood. And today, people are seeking new ways to improve their homes by protecting themselves from disease and from a changing climate. The 2020-2021 cohorts in Southeast Asia and the Andean region of Latin America went online and had greater focus on the linkages between housing, health, and sustainability. But how have we fostered sustainable low-income housing innovation? Well, sustainability can be addressed in many ways, but the housing sector is an established emitter. 40% of the world's CO2 emissions come from construction. Building represents a critical piece toward a low carbon future and a global challenge for integration with sustainable development. However, startups can play a fundamental role of disrupting this age-old industry with new solutions that are both more affordable and more sustainable, resulting in better housing outcomes. Take, for instance, mod roof panels. The founders of mod roof set out to make better roofing options for low-income Indian families. The result is a low-cost and easy-to-install system with a payment plan available through microfinance companies. Panels are made from scrap, cardboard, and natural binders to create a lightweight panel that's insulated and waterproof. The tiles are 90% recyclable at the end of use. But mod roof panels also help households future-proof their housing. They're made to be strong, waterproof, fireproof, long-lasting. It improves the safety and decreases the family's maintenance costs. Mod roof can make a home as much as 18 degrees Fahrenheit cooler than an iron sheet roof option, helping households adapt to high temperatures and reduce the need for cooling. There's also Earth Enable. 75% of Rwandans live in homes with dirt floors that create health issues. Earth Enable is offering an affordable alternative to cement. Earthen floors are made by compressing different layers of natural material and sealing it off to make it waterproof using a layer of oil. It's great for the environment, easy to clean and maintain. As of May 2021, Earth Enable has installed about 240,000 square meters of earthen floor to directly replace dirt floors, and that includes over 10,000 homes. In the next 25 years, much of the building is going to take place in countries like India and Rwanda. Habitat's ShelterTech and Shelter Venture Fund are aiming to make sure that those sustainable, high-quality solutions aren't just focused on high-income segments, but also reach the affordable housing segment.
How have we facilitated the financing of young entrepreneurs through a mechanism of revenue-based loan? Through the Young Entrepreneur Sustainable Funding Initiative, created by ADA with the support of Luxembourg Development Cooperation. Young people are one of the main groups affected by unemployment or precarious work. Only in Africa, 120 million of young people live in extreme or moderate poverty. Faced with this situation, microfinance has been considerable support for the development of microenterprises that have ensured an income for thousands of people around the world. However, young people who wish to develop their businesses further have more significant financing needs that microfinance institutions or banks cannot meet. This is especially the case for entrepreneurs who need financing between $15,000 and $100,000 and who do not have collateral or a financial track record to prove their solidity. Those entrepreneurs need a special support to prepare their businesses to receive financing. That means have an orderly accounting system that clearly shows their sales and profit, have a clear growth plan, and know their future financing needs. And once they receive financing, these companies need to continue to receive support to access market and implement their development plans. To respond to these needs, ADA launched the Young Entrepreneur Sustainable Financing Initiative in 2020. This project proposed to connect incubators and accelerators that have a pipeline of companies with financial institutions or investors to support young people to obtain a solution that mixes an innovative financing mechanism and close accompaniment. The Yes Funding Initiative is for companies led by young people up to 35 years old, with at least 2 years of activity and with financing needs between $15,000 and $50,000. Located in West Africa, Mali, Burkina Faso, or Senegal, or in Central America, in Guatemala, El Salvador, or Nicaragua. How does it work? The incubator selects the entrepreneurs with the indicated profile and prepares them to receive a revenue-based loan through a trust or an allied financial institution. The entrepreneur pays his loan based on a percentage of his monthly sales volume, and the loans can have a duration of up to 3 years. At the same time, the incubators continue to provide post-investment support. The amounts may increase over time as the business develops, and in this way, the funders will take a more active role. The objective for companies to consolidate and sync financing with financial institutions or impact investors. We have launched 6 pilot projects in Central America and West Africa with local incubators. The first credit have been granted in mid-2021 for a total amount of $142,000. This represents 55% of the total funding target of $350,000. We will continue with the pilot projects, granting more loans to improve the mechanism, especially the selection procedure of entrepreneurs and the granting and monitoring of loan procedure every month. We will continue to improve the relationship of trust between incubators and funders and develop a track record that confirms the adequacy of the mechanism to the needs of entrepreneurs and the investors, to be able to scale the solution and make it accessible to more entrepreneurs. To this end, we are looking for patient and responsible impact funders willing to continue experimenting with us, incubators, capacity building institutions, and providers of digital solutions to improve the financial and accounting management of small businesses, as well as market access. Join us to innovate financing for young entrepreneurs.
Hello, everyone. Good morning, good afternoon, good evening, depending on where you are around the world. I am Daniel Cosio, regional lead for Village Capital in Latin America, based in Mexico City. Village Capital is the largest organization in the world supporting impact driven seed stage startups and other organizations that are also working towards creating a more equitable future. So we operate not only in the US, but also Southeast Asia, Europe, Africa, and of course, Latin America. During this session, we're going to talk about how Village Capital in Latin America has been playing a crucial role in the development of a concept that is still known by some people in the ecosystem, but unknown to others that are not part of entrepreneur support organizations. And this concept is financial health. So to talk about financial health, we need to go back to 2015, 2016, when financial inclusion was the dominant term, right? And why was it? Well, in a region where people don't have access to bank account, to savings, to even retirement funds, of course, that was the first step for different organizations, such as startups, such as entrepreneur support organizations like incubators, accelerators, other corporations to start with, right? When we talk about financial inclusion, we talk about people that are getting access to services that they didn't have in the past. So, for example, a bank account, a credit, a mortgage. And this is the first step for them to get into the financial system and get a better offer in the future. When we talk about financial health, is okay, what is this person with a bank account doing with this bank account if they have no money, if they have no savings today, if they want to get credit for productive reasons, right? And this is something that is getting traction in the region. So at Village Capital, we've been supporting now 35 startups working in this trend. When we talk about financial health, we talk about the ability to save, to invest, to even manage personal finance and also manage the finances of those small, medium businesses, so that they can have a next step. And this is something that is getting traction among entrepreneurs, right? So not only creating one-off products, one-off services, but products that they can get in a recurring way that is also beneficial to them because they get recurring revenue, and this is something that can help them grow sustainably. Um, but it is something that we also need to remind us on to get reminded on often. The other thing that we're going to talk about during this session is that if we want financial health to reach its full potential, and full potential, we mean people have access to bank account, but also have access to savings, to credit that is at considerable rates, to people, going from shark lenders to institutions that are offering lower standards and also lower rate standards, and entrepreneur support organizations, but also investors and government. And here we're going to focus on investors, right? When we talk about the way that they can support the development of fintechs in the region, of financial health focused startups in the region, we need to talk about patient capital, revenue over rounds, and also um, regionalization, right? So when we talk about patient capital, we've been seeing what's happening in the past 6 7 months. Latin America is getting the attention it deserved, but we also need to be cautious because with this amount of money, with this amount of funds flowing into the region, we're gonna see many cases where startups are working to grow at all costs, and this is not beneficial to those other smaller players in the region.
All right, all right. Thank you so much for that wonderful, inspiring video. Thank you here, Mike. Thank you so much, Village Capital ID, and other people that have shared the video. We are so inspired. Now, please let us run to their booths and let us go and interact with them. Like the expo by now. This is the third day, so I'm sure you know the drill. The expo is like you walking into a physical booth in an event and interacting with people. Some of those booths have videos, some have materials about what they do. Some will actually have live people at the booth that you can interact with. They will host discussion. So please let's go there. Let's engage with them. This is gonna be like the last step. Or let me say that's another very important thing that you need to wait for, and that is the closing remark and the dance party for me. Me and Sakai are gonna come back and give you some dance move. As a dance, I'll give you some last energy to go with. So please go to the booth now and have fun, enjoy yourself, and connect with with the organizers and the speakers on the video. Thank you so much. Bye.